Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news negative data starting to flow more aggressively in the US as the consequences of dumb policy show through. It has been a track of decline for the first 100 days of the second Trump administration. First, the US Red Book Index of retail sales rose 6.1% last week from the week before, but the strong suspicion is that much of this is inflation-related. And that is supported by a sharp drop in consumer sentiment reported by the Conference Board, down to a 13-year low in April and confirming the University of Michigan's earlier sentiment survey. US job openings fell by 288,000 to 7.192 million in March, down 901,000 from a year ago, to its lowest level in 6 months and well below market expectations of 7.5 million. The drop was broad-based. Their quit rate rose to an 8-month high. And the US trade deficit in goods and services widened sharply to $162 billion in March, the largest on record, and well above the expected $146 billion gap as tariff threats drove US importers to front-load their purchases. Unsurprisingly, that also generated a spike in wholesale inventories. This bad trade result probably cements a very weak first quarter 2025 GDP result. The next Atlanta Fed GDP Now update will come tomorrow and is unlikely to be pretty. The Dallas Fed's services sector survey pointed to weakening conditions and a weaker outlook. And the Canadian election has resulted in a narrow win for the centre-left, that's the centre-left in North American terms, of the Liberals and their Quebec coalition partner. This is an unusual fourth consecutive win for the Liberals, and an unlikely one, very much aided by Trump trolling. It'll be a tough gig because they are clearly facing recession in Canada, also flowing from the newly fractious US relationship. The ECB survey on consumer inflation expectations in the Eurozone rose in March, with the year-ahead expectations up to 2.9%, its highest in a year. EU consumer sentiment dropped in March and to its lowest since December. And we should probably note that Denmark says it wants the EU to join the CPTPP. In Australia, there are 3 days left of campaigning in their federal election. Polling is tightening. Despite those polls still showing Labor ahead, much will depend on how voters rank their preferences, which could make it rather close. The overnight dairy pulse auction came in better than the futures market signalled. The skim milk powder price rose as expected to its highest in a year, but the whole milk powder price did not fall as expected. Rather, it showed a small gain to its highest in 3 years. The US Treasury 10-year yield is now at 4.17%, down 4 basis points from yesterday at this time. And the price of gold will start today at $3,319 an ounce, down $17 from yesterday. And oil prices are down $1.50, at just on $60.50 a barrel in the US, while the international Brent price is down a bit less, now just under $64.50 a barrel. These are 2-week lows as global trade tensions and weak US data hampered the demand outlook. And the Kiwi dollar is now at 59.4 US cents, down 20 basis points from yesterday at this time. Against the Aussie, we're up 10 basis points at 93 Australian cents. Against the euro, we're unchanged at 52.2 euro cents. That all means our trade-weighted index starts today at just on 67.6 and down 10 basis points. And the Bitcoin price starts today up 1.3% from yesterday at $95,401. Volatility of the past 24 hours has been low at plus or minus 0.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.